Investing channels on YouTube have been changing. I don't know if you've noticed it, but I definitely have. Channels that I've followed for a long time that have had dividend in the name of their channel have not been talking about the conservative ways to invest in the stock market. There's been a lot of talk about penny stocks in the past couple months, especially at the beginning of 2021. And why is that? Because in the past, I always do research for videos. I look at these search history trends because it's not worth my time to put all this time and effort into making videos, editing them, and uploading them if people are not looking for this information. So I usually look up these search terms, and I had a series for the end of 2019 going into 2020 where I was talking about Robinhood top stocks, because the whole idea was that these are stocks that are popular on Robinhood, and these are the demographics that I'm trying to hit of the younger investors. And now when I look at the stocks that I used to talk about that used to get a decent amount of traction, stuff like Microsoft, Apple, Amazon, and then you have stuff like Tesla, which was obviously the top dog of 2020, being up 743%. And then I would talk about these smaller, lesser known stocks like Plug Power, ticker symbol PLUG, and I talked about why I thought it had a fantastic opportunity for a long-term investment, and obviously it has done incredibly well in the past year, but now these stocks don't get searched as much. And here's what the search terms look like for the word investing. There's a nice spike in 2020 going into 2021 as a lot of people, when the stay-at-home stuffs happened with the lockdowns, people were looking to invest in the stock market. And then retail investors start learning about the overall stock market, and then you get the GameStop fiasco of 2021, you get another boost there. But then you look at some other investing terms, stuff like dividends, which are this fantastic way to bring in income for long-term investments. You don't see as much of a boost. But then here's what the search history for penny stocks look like. Today I'm going to be talking about why penny stocks have become so popular in the past couple months specifically. I'm going to explain how they move and the risk associated with them. And then I'm going to be talking about if I would ever consider investing in penny stocks, because in the comments of my videos, I get people asking me all the time to talk about their favorite stocks. And more frequently, there's stocks that are not stocks that are traded on the stock exchange. They're either penny stocks, which are over-the-counter stuff, or it's just stocks that don't have as much information about them. So today we're going to be talking about them. So part one, why have they become so popular? Penny stocks have become popular for one specific reason, and it's actually really simple. People think they can get rich from them. I see ads for this all the time that talk about how this guy turned a couple $1,000s into $1 million, and that seems like the dream, because the reason that I wanted to target the younger demographic is because you can build an incredible amount of wealth from safely investing in the stock market over an entire lifetime. And building wealth takes time. But why would you spend an entire lifetime doing it if you could go from $10,000 to $1 million in just a couple years? Have I been guilty about talking about stocks that I think could double in the next year? Yeah, I've done it a couple times. But the times that I've done it, they've all been stocks that I wholeheartedly believe in. They're stocks that I had money on the line as well. And these were stocks that I had done research on. I thought they were a decent opportunity based off of a discount. And one of the first stocks that I did that with was Sonos this past summer. And since I've made that video 9 months later, it has doubled in price. So I don't put out these BS stocks that I don't actually believe in. I talk about stocks that I fully believe in. The situation with GameStop is a fantastic example of people seeing this once in a lifetime opportunity of being able to become rich. It's this whole dream of you have no idea what's going on in the stock market. People start talking about GameStop on social media. You get interest, you see the rise in price, and then you start wondering, well, if it's going up, why don't I take advantage of this? Why don't I buy in? And then people buy in, and we've seen how quickly the gains can go away after the momentum stops. And so now we're seeing people with little to no experience in the overall stock market coming in, reading a couple Reddit posts, and buying into these very volatile stocks, and a lot of them end up getting burned by it. People are picking penny stocks over large cap stocks because the incredible returns are much more attractive. Why would you invest in a stock that's going to, on average, bring in 10% a year when you can invest in a stock that's going to be up 1,000% in the next year? It just doesn't make sense. But there's just so many risks associated with it. The funny thing is that Wall Street bets that for the established investors, the people that are trading on Wall Street bets are incredibly risky with the actions that they do. The funny thing is that penny stocks are actually banned on Wall Street bets for discussion because they are too volatile and too easily to be manipulated. I just thought that was kind of funny. Over the history of the stock market, the S&P 500 has returned around 10% a year for the past 100 years. Using the rule of 72, which is a decent way to kind of judge how long it's going to take to double your money based off of the percentage that you're bringing in a year, it's going to take around 7.2 years. The number isn't exactly 7.2, but it's a good estimation. So why would you do that? Spend 7 years to double your money when you could find a stock that's going to double in 1 year? And I've started to see the largest invest in YouTubers out there. It's not just these smaller guys like the size of my channel. I've been seeing channels with 300,000+ subscribers talking about penny stocks, and it's kind of rubbed me the wrong way. What is more likely to get clicked on? This video that I made talking about a 12% dividend stock that I loved at the time, or a stock that says that it could be up 1,000% in the next year? It makes sense why people are going to these types of videos, and I don't blame these YouTubers. You're finding a niche people that are looking for this information, but it's just so dangerous. Part 2 of this video, let's talk about how these stocks move, because there's this kind of misunderstanding of how penny stocks move. A lot of people think that it's just a pump and dump situation. That's not always the case. Pump and dumps are created based off of a well-known person boosting up the exposure of a penny stock, the stock price goes up, and then it crashes. That's not how it always happens. So I want to talk about how these penny stocks move, because a lot of people don't fully understand it. In general, large cap stocks move based off of the expectation of future earnings and success. And so that's why earnings reports have so much volatility going into them, because they tell you, one, how they've done in the past, and they give guidance for the next year, unless it's this year and we've had the pandemic and companies have been cutting guidance because they have no idea what's going to be happening in the future. But that's just kind of the general thing. Penny stocks are entirely momentum based. The easiest example is with GameStop. GameStop is not technically a penny stock because it is over $5, which is what the determining factor for being a penny stock based off the New York Stock Exchange is. So it's over $5, but it has moved with the momentum plays. So I wanted to talk about it. So you see people hyping up the potential of the stock. You see the momentum of the stock pushing it up. People get involved, and then you have the whale start dumping their shares at a profit. And the people that get in later are more likely to get burned when it crashes. And people don't want to miss out, so we start going in. Then the buying pressure kind of dries up, and the stock falls back to the level that it's supposed to be at. With penny stocks, it's much easier to move them. And the two reasons why that is because one, it's a significantly lower price, and there's less shares available, which is called the float. When you look at a major stock like Apple, Apple has 16.75 billion shares to trade, and they're trading over $100. So to have a significant move, you're going to have to put a lot of money in to actually move the market in any way. Then I looked at the first penny stock that I could find, which is ticker symbol NAK, which is being traded on the New York Stock Exchange. And it's trading for 92 cents. And its float, just a reminder, Apple's float was 16.75 billion. The float on this penny stock is 497 million shares. And since it's trading for less than $1, it does not take as much money to move the overall stock because it has a much lower float. So you'll see people on YouTube hyping up these penny stocks because, they maybe see potential for the long term, but the whole reason that they move so violently is because it does not take as much money to move it in a positive direction or in a negative direction. So if I buy a share of Apple, nothing's going to happen. If I sell it, nothing's going to happen. But if you have billions of dollars going in and coming out, it's going to move a giant like Apple. In comparison, it's going to take a fraction of amount of money to move a penny stock. And that's why they're so easy to have these 1,000% jumps, because it does not take a lot to actually move them. Is it possible for a penny stock to have reliable growth, double in a couple months and then just continue to go up? Yes. The problem is the way that a lot of these penny stocks are traded by the professionals is they find stocks that have unusual movement. It's usually a news report pushes it up like 25%, and it comes under the radar of these whales, which is what they call a cryptocurrency, but that's how I'm going to refer to these people that have a lot of money to spend. Then they'll go in, play the momentum, and wait for it to continue to rise, and then it'll sell off. So a lot of times when you see these penny stocks, it looks like a pump and dump because the stock price goes up significantly, it stays there for like a day max, and then just starts to shed that price over time. But they are not all pump and dump plays. A lot of them are momentum-based plays that the professional traders that pops up onto their radar, and the trend is your friend, and they play the trend. So not all penny stocks are pump and dumps, but the ones that you're going to see talked about are the ones that are manipulated, and that's why they're so dangerous. And it's not only because you have these major people talking about it, it's a lot of momentum-based trading. Number 3, let's talk about would I ever consider buying into penny stocks, because I always try to be as transparent as possible, talk about what I would actually consider buying. And that's why I don't talk about small cap stocks, because I think they're too dangerous, because the risk involved is above my risk tolerance level. There are people that make money trading penny stocks. One of the ones that I really respect is Ross with Warrior Trading on YouTube. I really respect him because he's very transparent for what he's done. He live streams what he does. He only day trades, so there's no long-term holding. There's no manipulation because he has closed out his position by the time he posts his video. And you can see what he does on every day, and he's not afraid to show you the bad days as well as the green days. Even a pro like Ross, who's been doing this for such a long time, has bad days. Here's a day where he lost $275,000 in a single day. That's horrible. The difference is that he's so consistent with his gains that I'm sure he's above like $100,000 profit for this year. So he is very good with risk management. He does not put all of his money into a single play, and he doesn't hold it for the long term. So yes, there are ways to trade penny stocks, but I would consider it trading and not investing. I'm trying to be very careful with the words I use, because investing, you're trying to play the long-term potential of a company. You're believing in the company. Trading is you're based off of momentum, how the stock is actually moving, and you don't really care what stock you're buying. When I was swing trading, I didn't care what the company was. I would just find stocks that I thought had the indicators to prove that things were going to go well and I would buy in because of that. So, but the major problem with a lot of people getting involved with penny stocks is that they go all in. All in is a term that gets thrown out a lot, and I have been guilty of it in the past. I talked about going all in on GE. That was just because I took a larger position than I've ever taken. It was the largest position in my portfolio by a significant margin, and for me, that's considered going all in. All in for a lot of people is 100% of their portfolio, and that's where you start getting into danger. I found this graphic, interestingly enough, on the penny stock subreddit because I wanted to see what people were talking about, and it talks about the recovery that you would need to have for certain size losses. And so if you're in the overall market, things will recover. Every time we've had a bear market, which is a drop of more than 20% from the previous high, it's recovered in around 2 years. And then with this pandemic, it recovered in a couple months. With a penny stock, if you're down in that position, the likelihood of it recovering to where it was is so unlikely. And so with penny stocks, if you take a loss, it's likely not going to bounce back and you're just going to end up bag holding. Here's an example of one of Ross's trades on ticker symbol CLEU that made him $22,000. Here's what the chart looked like for that day. It had an incredible rise and he was playing the momentum side of it. He did very well, came out positive. But if you got in on the hype and you wanted to hold it for a long-term potential, you're going to be hurting for most likely a while. And so here's the reason why I will never buy a penny stock and why I'm never going to be talking about them or specific ones on this channel. There's no smart way to play penny stocks for a long-term investment. That's just my opinion. Some people may disagree with me, but in general, I don't think it's possible to reliably trade penny stocks for a long-term investment. The stock market on average has returned 10% a year, and with $100 a month for 40 years, that's going to turn out to be $500,000. That's a lot of money, but the whole point is it's being reliable. Push that up to 20%, which is what my goal for my investing career is, that number jumps up to $10 million. And if somehow you match the returns of the NASDAQ, which they saw in 2020, which was 43% gains, you'd have $6 billion. That's billions with a B, with only $49,000 invested. The worry I have with new investors is that they're focusing on the now and not looking to the future. You don't need to have 1,000% gains in a single play to retire wealthy. This is a long game. That's the whole point of investing. If it was just go in for one day, make 1,000% and get out, that's gambling. That's not investing. And if you could do that reliably, no one would be investing in the overall stock market. No one would be buying dividend stocks if there was a reliable way to play these penny stocks. But there's just not. That's the problem. With the overall market, it will recover if we have a crash. A crash in the stock market is a buying opportunity. A crash in the penny stock means it's never going to get back to the same level that it was. And that's why I never talk about penny stocks in this channel. And I know it'll probably hurt my channel because that's where all the views are going, because that's what people are looking at. But I created this channel to try to help people avoid making the same mistakes that I did. I started out as a day trader because I thought I was really good. I thought I was outsmarting the overall market, and my goal was to make 1% a day. When you say 1% a day, it seems very realistic, but in practice, it's really tough. And if you have one big loser, for example, I lost 75% in a couple months, based off of that graphic I showed, it would take a 250% gain to recover the money that I lost and get back to even. So in my mind, that kind of risk is never going to be acceptable for what I'm trying to do with my money. I don't care what you do with your money. I just try to give my opinions on things so that you will consider what you're doing and you don't make a rash and impulsive decision, because once you lose the money, it's very tough to get back. In my mind, there's never a valid way to create a trade thesis on these penny stocks. That's why I like making these videos, because it forces me to do as much research as I can on these companies to learn how they've done, how they're doing in the past, and what other people think. And that's why I make these videos, so that other people can hear my opinions. When you talk about these penny stocks, it's impossible to find enough information to make me feel comfortable buying in. I have stocks in my portfolio that even I struggle to find some sort of discussion online because they're not as popular of a stock, but I can find enough information where I feel comfortable owning it. With penny stocks, it's pretty much impossible. So you're buying based off of what other people are saying, but you don't hear what the company does. So that's my problem. Overall, I think penny stocks are a dangerous spot for investors. I think that a lot of people are going to get burned based off of the new investors coming into the market, seeing how GameStop rose, and I'm just worried that people are going to make a rash decision and blow up their account, and that's how people get pushed away from the overall stock market. So penny stocks have become incredibly popular on YouTube. I don't blame the YouTubers for talking about them because that's where the views are, but I'm worried that people are going to get kind of involved with the wrong people, and penny stocks are not a place I'd want to hang out, and so that's why I'm going to be sticking to my reliable investments. And as I mentioned, with 20% a year with $49,000 invested, you can come out with $10 million, which is plenty to retire. So you don't need to make these 1,000% gains in a year, and I'm trying to show that based off of this channel. So thanks for watching. Let me know if you've ever considered buying a penny stock, and I will see you guys in the next video.